All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night, October 13th, 2023. We'll start with the 30-minute chart hybrid swing portfolio. And that means we start with Alcoa. 30-minute. As always, this was the open today, this bar, and that means the yellow box is today's price action, with a high here and a low there. There's the red dots are sells, green dots are buys. The red boxes represent the standard risk we take. We have the RL10, which is our proxy for price. It's color coded based on the MACD histogram for the four seasons of summer, fall, winter, and spring. So you can see that color coded on the RL10. The black line is the RL30. The thin red line is a simple moving average 30. I like to compare the simple moving average 30, that's this one, with the RL30, that's that one, and those turning points quite often are confirmations of a turning point in the trend. So on this one, this trend is coming down. You have the RL30 and the RL10 are both underneath the SMA 30, and then you get this kind of price action, and that's strong enough to reverse the trend when you look at the 30. So when I'm looking at the moving averages and regression lines, I think of there's a fast one and a slow one in each pair. And if I'm just looking at the regression lines, the RL30 or the RL10 is the fast one, and the RL30 is the slow one. And if I'm looking at the 10s, the RL10 is fast, and the SMA 10 is slow. The SMA 10 is the center line of the dragon, which is that 10-period Bollinger Band plus or minus a half. And that gives us a noise boundary that defines key turning points. And the RL10 is faster to adapt than the slow-moving 10. So when you get the RL10 crosses the dragon, had to cross the SMA 10 and then reverses and leaves the dragon, that's the beginning of potentially an upward trend. And then you see that confirmed with the RL30 is already above the SMA 30, and that leads to, unsurprisingly, a nice move. And then if we're looking at the 30s, the next slower time frame, the RL30 is fast and the SMA 30 is slow. And so you can use those comparisons to give you some relationships between early in the trend at turning points and then the confirmation later on. So just that explains the images you see. And then the PSAR dots are constructed using the RL10 as the price. These flips, when it goes from underneath price to reversing, we call that a PSAR flip, and then that box is the PSAR flip box, and we're always interested in the size of that box between the dots as compared to the statistically derived standard risk box that we choose. They're often the same. The blue box represents the last 5 days of price action. The blue outline box is the 10-day, so this is a 10-day low here. And I think that's everything on the screen. So on the swing frames, the 10-day look back and the 5-day look back are plenty of data, because you have 13 30-minute bars in every daily move. So if you're looking back 5 days, you have 65 bars of price information. If you're looking back 10 days, you have 130. So I generally have anywhere from 5 to 8, sometimes 10, so that I can see how the snake of price is wiggling. And then I look at the fast end of that thing to see how that little snake is wiggling. Which way is he going to go? Is he going north or south or sideways? And then we can use the size of the moves and then the frequency of the moves to give us some estimate of the amount of energy that's in that snake, so we can anticipate how fast and how far he might reasonably go. It's not a prediction, but it does lay out a boundary of what normal behavior would look like compared to the last 30 bars, and then what abnormal behavior would look like, because we're interested in targets that are behaving abnormally, because that tells you something extraordinary is going on, and from those abnormal conditions, an abnormal follow-through may occur. Back to our program here, right? So 98% of the time I'm using the RL10 to indicate the price. The only time I'm using the price bar itself is if I have a position on the long side and I have a stop, and I may exit when this bar breaks my stop rather than waiting for the RL10 to break the stop, because there's only one time when the price bar itself moves away from the RL10, and that's at sharp turning points with massive moves. And so sometimes waiting for the RL10 to cross happens here, whereas you might have wanted to get out on violent price action sooner. So that's the only time I'll ever override the use of the RL10 to indicate price, and that is when I have an open position and I'm trying to preserve actual money. And that's why I show the bars on there, even though most of the time that's looking like noise. What do I mean by that? I mean that when the RL10 makes a turning point like this, we treat that spot as the statistically significant low of this downward move. Even though there was some price action in that tail that went further south, we treat that as noise. And rather than putting our stops down here or waiting for that to be violated to get short, we use the statistically significant turning point of the RL10, which is a smoothed representation of the last bars, and it represents where the perfect price based on regression is actually located. So in that sense, we're using in each time frame, these black dots represent where the perfect regression price is according to the prediction of the regression line. That should be there. And so we treat that little dot as the correct or perfect price, and we treat the bar as noise. Check or hold. That's an essential insight into the way we structure our trades and make decisions. Okay, so Alcoa, harsh winter sell-off. The RL10 could not get through the dragon, and it could not get through the PSAR. So that confirms that the downward trend is still in place, even though if we had looked at price, we'd have said, oh, price violated the PSAR, but the PSAR didn't flip. Why is that? Because the RL10 is being used to compute the PSAR dots. So we discount the price violation, and we're waiting to see the behavior of the smoothed price, which is the RL10. So now, about 6 bars into the day, or 3 hours from the open, we still have the PSAR flowing down, the Dragon is flowing down, the RL10 has tested, rolled over, and is failing. So when that RL10 rolls over, I consider that a low-risk entry, and I use the standard risk box to frame that trade, and then I just manage the exit. It got this far, it came back up, and I took it right as price hit the skin of the Dragon. I don't want to stick around. That's enough. And so on that trade, we risk the red box, and we capture this move. So that's about a 0.5R, and there's no overnight risk. Check or hold. AI, same trade, collapsing Dragon, continuation from the previous sell-off. It, however, did not fail much. It was reasonable to hope that this thing would fail like it did here, and that it could come back and test this low. And if it had violated below this low, we'd have added a second position, because now there's evidence that it's going to do a third leg. But instead, it just calmed down. Now, as it fails to fail, notice how the winter becomes spring. It comes into the station. The PSAR comes down and joins it. The Dragon narrows on the basis of reduced volatility, and that's a perfect exit near the end of the day for about another half an hour. Perfectly orderly move. Check or hold. Amazon, this is another collapsing Dragon. We have the sell-off yesterday. Today it continues. It breaks below the belly of the RL10. Short, standard risk. Observing the fall, the RL10 reverses. We take the exit at the skin of the Dragon. We capture this move against that much risk. That looks like 2R. If this violates this low on Monday, we'll be short again, and we'll be looking for a price to come back to this support level. And with this much standard risk, as you can see, it's the same risk box each and every time. That would be probably a 3R move on Monday. So Amazon is going to be a high priority trade on Monday. Cat, no trade today. There was a short available. Cliff, this one has featured a big sell-off, an even bigger sell-off, but when we took the Dragon exit, the rest of the day it followed through to here. So we didn't chase, we just captured the move we wanted and waited to see. And what did it do today? It gapped up, then sold off harshly, and then on the basis of these two strong downward moves, I have no hesitation getting short here. Standard risk. It sells off through the PSAR. So you can see we actually front ran the PSAR flip there. But it doesn't fail further. It just kind of drones into here, and I'll take that one again, and that's about 0.5R. So, and then no overnight risk. Happy with that one too. Chevron, or I'm sorry, CVS Pharmacy. This was another one where, you know, we'd been enjoying this long move to the top. And have had 2 days of sell-off. Today it gapped up ran all the way to the top. I missed the long. It rolled over and started failing along with the rest of the market. That's a 1-2-3 entry to the short side. Advanced technique. Standard risk box. Kind of confirms when the PSAR flips. I'm waiting to see the belly of the RL10 violate so I get a collapsing dragon signal before I put a second position on. But this thing just oozes sideways, and near the end of the day, we capture +1R. No overnight risk. Check or hold. Disney, no trade, although there were a couple moments in here where I was tempted on the short and tempted on the long, but there was hardly any movement in here, and there were other things that were moving much larger today, so we want to find the mover, and this was just not moving today. I like that it didn't fail further. That'll make it a target next week. Dish Network, the RL10 rolls over with a lower high. Here's the previous swing low at the belly of the RL10. When this violates through that, that gives us pattern number one, our favorite pattern, the collapsing dragon. We put the standard risk on it. That is the same risk that we always use with Dish based on statistics. It sells off harsh into the winter, but then rolls over and immediately comes racing up. I take the exit at the skin of the dragon. This is an example of one of those few cases where the size and volatility of the price was so great that it outran the RL10. So if you notice, what the heck? You notice it's going to outrun the RL10. There's the RL10. So this price actually came all the way down to here and then rocketed straight north. And I wanted to preserve that at the skin of the dragon so that I could lock in that gain. So that's a case where I have open trade with money in hand. I get a sharp reversal, an abnormally large price move, and I elect to take the sniper exit at the skin of the dragon in order to capture 0.5 against this risk of 1. Notice that the RL10 is, in this case, slower to react than price, which reversed sharply. It actually left the RL10 behind. Ordinarily, when price is orderly, it doesn't do that. And I'll show you some cases where that's true. So here's one where the price and the RL10 are really kind of moving in tandem. Here was a spot, though, at the open 5 days ago where the price action was sharp and violent and quick reversals, and the RL10 was slower to respond. So there are some moments in which the RL10 breaks down as a perfect proxy for price. So when do I use the override? When I have an open position with money in the game and I want to lock in a standard exit, I will use price and just chalk that up as an exception that proves the rule. Check or hold. Devon Energy, gap up. Buy it on these in the second bar as it's continuing to go up. It rolls over gently. I take the skin of the dragon exit. Once the RL30 rolls over, I take that one instead of waiting for it to come and hit the PSAR. And on that little risk, we earn 1, 2, 3R and no overnight risk. Electronic Arts tried the short, and this is a collapsing dragon. After a beautiful long run to the top, which culminated in a explosive move and then couldn't do anything else, it started to slowly decay. And so there's a high, a lower high, and it's falling out of the dragon. And the market was very weak, and these guys are fat, dumb, and happy. The short side feels hungry, so I try the short. I'm hoping that it can get back to this support level. It doesn't. It just rolls over here, and I stayed with it as long as I could, and it just scratched. Nothing ventured, nothing gained. This is a continuation in EEM. There's leg 1. Here's a continuation, leg 2. When the RL10 rolls over, I now have confirmation with information that the previous primary trend is continuing. So that's a continuation pattern. So let's look at all the evidence. There's a lower highs. Here was a collapsing dragon that was very successful. It's in the harsh winter. The PSAR was never breached. The SMA 30, the middle of the river, has rolled over. The RL 30 has rolled over and is leading the way. The dragon is shaping down. The RL 10 rolls over and is starting to collapse. That's the lowest risk entry you'll ever see in an orderly move right in the middle of this move. And I think it was, I was hoping it would come back to here or even here. It got halfway down the stack and started to stall. So I take the dragon, exit, and bank 2R. Check or hold. I especially don't want to hold emerging markets over the weekend. The gap on that one is brutal. ETH, it was a gap and go. It had cleared the previous hump of the RL10. That's an emerging dragon. It worked for a while and then sharply sold off. I ended up giving back about 2/3. So I cash it here. Got a bad fill inside the dragon instead of the edge of the dragon where I pushed sell. And we gave back this much and only kept this much. So we gave back 2/3 of that, and that's just due to slippage and the spread. EWW, 1R on a continuation pattern. Same thing. Notice the strength decay right here. It's a new day, continuing to fail. Just get right back on board, standard risk. Doesn't fail further. Get out before the close at the edge of the dragon. 1R. No over the weekend risk while the world's at war. Brazil. Large gap up. Here was the short. We tried the long yesterday. It failed for -1. Stop and reverse for +3. It closed well. It gapped all the way up to here, ran all the way to the top, and then started to fail. The whole market was failing, so we put the short on. It confirms by breaking through the PSAR and then just kind of stalls here and near the end of the day. I got to make a decision. Do I hold it over the weekend? No. Next decision. So we capture 2R and can sleep comfortably. Intel, collapsing dragon, standard risk, 2R, exit at the dragon. Boring. IP, no trade. Real estate, no trade. Coca-Cola, no trade. There was a short after the reversal in the morning. No trade, though. KRE is one that I was willing to hold. This was not an impressive move up. It was really grinding. No conviction. Leg one, this started leg two. It started collapsing right away. Standard risk. I'm holding 2R, and the RL10 was pointing lower, and it's failed most of the distance back to the support level. And so, because it's a regional bank, I think it could flow there on sector weakness, and I was willing to use the 2R as a buffer and have that as one of my few over the weekend trades. Mattel, no trade, sideways quiet channel starting to happen. McDonald's tried the gap up and go, and it failed quickly for 1R, and then I just stayed out of it. Merck, no trade. Microsoft, short side, caught a 2, 1R. Marijuana, 1R on the owl entry to the short side. Nvidia, 2R on the caught a 2, continuation to the downside. That was one I thought about holding over the weekend. Just, I know how to get back in, and I'm leery to hold tech short over the weekend because that has been the strength leader, and that could suffer from a big gap the other direction. So I'll just take my money and run. Clean energy, continuation pattern for 1R, no overnight risk. Rivian, scratch. The S&P, you see, was basically a gap up and then sell off into a pessimistic close. Treasuries also gapped up and then did not follow through. This is the argument right here for taking those exits with money in hand and not having any overnight risk, because the gap up here would have eliminated 2R in gains with no opportunity to follow through. So most of the time I'm cashing those and only holding a few in this strategy. Tesla, short for 2R. Again, dragon exit, no overnight risk. U.S. Steel, no trade. I wanted to be a little more verbose tonight in order to just share some of the logic of the trade patterns for the foundation students, but also for advanced students. All right, here is the sniper trade of the day. So this is on a 3-minute chart. This is where it closed yesterday. Here's the opening range, 3 minutes in the blue bar. And that is ordinarily set so that we're ready to go long. If this price were to come out of there and break higher than the highest high of the opening range 3, in that strategy, we buy that here and we put whatever the size of the standard risk box is, we put it on. Or if it violates the lower low or the low of the OR3, this way, then we would be short here. Again, with the standard, whatever the standard risk box, standard risk. This one, if we get short, the breaking of the PSAR would be significant. Crossing the simple moving average 30 would be significant. Both of those prices would be an indication that this thing is failing. You notice that we were in the summer, but it has turned to fall and re-entered the Red River. So this means that movement here was starting to stall. It gapped up and then immediately reversed to the lower portion of that OR3. So that's a little pessimistic or favors the short side. Check or hold. You're ready to trade the strategy when you see what I just said instantly. So that's the entry to the short side. with a standard risk box. By 3 bars into this, even 2 bars actually, I would say, your stop, which is here, should be at least to here, and now maybe to here, and now maybe halfway down this bar right here. So you could put your stop at 1, 2, or 3, and if you do, then you've locked in money. Entry or moving it to position 1, you would then be able to lock in that much, which is about a 0.3 win, which is what we call the no lose plus dinner for 2 exit. This one locks in that much. That's about 1R, because that's about the size of your risk box. This one locks in about 1.5R. By show of hands or typing in the box, where would you put your stop? 1, 2, or 3? I suppose you could even go, hey, I want to be greedier at 4, or maybe just take that at 5 and say there's my 2R. Or I could take the 2R battle drill and add a second position now, because I have, there's 1R, there's 2R. I have 2R in hand. So rather than just capturing 2R and going home, you could actually think about a second position there with a tight stop at 4, so that if this is supposed to fail right away, if it doesn't, then you get out of the entire position and you've only given back that much. That's the aggressive play. But it does rely on the fact that you got markets money in hand. And if you exit both positions here at 4, then position 1 earned enough money to pay for what you gave back on that little snippet. Okay? It sharply reverses, and whatever stop you had in place looks like it got hit. This right here would be a perfect exit, like after this harsh sell-off to the low of the day, which is right around 2R. It then comes halfway back up, opens, and then starts racing northward. That's a case where, for money management, I would take the exit, or I could take the exit there rather than here, which is where I ended up taking it. And notice that the RL10 is a little bit lagging compared to how fast that price reverses. Because I have money in hand, I'm inclined to either take that exit right there, or the one that I did take right here. As it stands, this earns approximately 1R. Check or hold? This, you could have resumed the short there. I don't like it because the RL10 has just barely started to roll over, and it's actually starting to shape to the upside. But that's a legitimate collapsing dragon short. I wouldn't be offended if you use market's money to do that. The RL10 now breaks through the PSAR. I didn't take it because the whole market was suffering, and I didn't have the will to get long. If you get long here or here and you get a peak value up there, if that's your entry and you're that much to the good, you should never lose money on that trade. Yeah, but my stop was down here. Well, don't lose money. When you have that much, you have 1R in hand, because your stop would be down like this. Don't lose money when you're 1R in hand. So this rolls over. It had a high, a lower high. I treat that as a COTA 2 to the downside with a standard risk. So now we're short. Check or hold. Now, once again, 4 bars into this thing, these are supposed to work right away. And when that collapses below here, notice when that support level collapses, it's a big sell-off. That's a really favorable sign for the downside. So I should have my stop, which was probably here, even though this is the standard unit of risk. Because I have a PSAR there, that's probably where I execute. But I want to have my stop probably to here so that I can lock in that money. I want that money to be mine. And certainly by this time, I could think about lowering it even more to capture more of the outsized gain. So in order to make these decisions, like if I go to the 2-bar high or the 1-bar high, those are the next two choices. So I could have a stop at 1 or 2 or 3. By show of typing, where would you place your stop? 1, 2, or 3? This 1 is the no lose plus dinner for 2. 2 locks in 1R. 3 locks in 1 bar, a 1-bar high. If you were at 3, you just got out. And you might have had to make a decision here on if you got out at 3 and then you saw this, a new low of the day, you have to have a decision rule in your system that says, can I re-enter? If you were at 2 or at 1, you're just still in. And then maybe you put your stop down to 3. Oh, or which is a 2-bar high. Or here at 4, a 1-bar high. Or half the way down at 5. Good problems to have. This discussion is much more important than trying to get a perfect entry. It's being very clear on what you're trying to achieve and having absolute clarity on your rule set, and then ruthless execution, and then study the results after the market closes in order to make decisions to edit. I only had one position on this thing, so I was actually pretty relaxed the whole way. 1, 2, 3, 4. So that's a 4R trade. Could you have gotten out here and then re-entered there? Yes, you absolutely could have, and then you would have gotten out here anyway. So that's still at least 3R on that one. Nothing wrong with that. Good problem to have. Now we're into the lunch, That is a harsh winter, that big move. Supported spring crossing in the usual way. Standard exit for about an R. Check or hold. I like to see the far side of the hill. When I see the far side of the hill and I've got money in hand, and the PSAR is already rushing up to meet me, I like taking it at the skin of the dragon and locking in that gain against that much risk for 1R. It breaks the PSAR, so I get short because I want to be aligned with the 4R trend of the day, and that's a dead cat bounce, and this is a resumption of the primary trend until proven otherwise. It has to get below the PSAR flip for this to be double plus goodness with a collapsing dragon. So this is just the tactical trade space in which I'm just trying to get my stop below my entry so that I can lock in no lose plus dinner for 2. That's all I'm trying to do. This is where the 2R or the second position could have gone there on a break of the collapsing dragon. It's pretty close to a 2R battle drill. When this little shelf breaks, you might have also put a second position on here at about 2.5R and then quickly got in the money. Good problem to have. Standard exit in the middle of the dragon. I gave it 4 bars to fail further. It did not. When the RL10 reverses, notice how it makes a sharp point. It's going this way until it makes a hard pivot. And that would have been a perfect dragon exit. This was at the dragon spine. Acceptable. The RL10 doesn't cross the dragon until here, so there is just a little bit of lag at that crucial turning point. But, you know, when price gets through the dragon and the PSAR, I don't mind if you were to get long inside here. And really, if you got long here or here, you're getting the same entry. This one has the confirmation of the RL10. Now, to the upside, the things that I'm looking for as targets, the SMA 30, which is the middle of the river, that's a z-score of 0 on the z-score ladder. So that's the SMA 30, middle of the river. I'm looking to get to the top of the dragon, top of the RL10 and the PSAR, and the VWAP. Those are all, so if I get long inside here, those are all reasonable targets. If it can get above the VWAP, then it could go all the way to the back to the high of the day. So by the same token, if I were to get long here and it started to fail, where could I execute in our system? At the belly of the dragon or at the PSAR flip? And here, which would give you a collapsing dragon. This would be a Kata 2 short. I would execute here to get out of that trade. And I would be short for sure, not later than the collapsing dragon. and we get to the end of the day and miss the. You would not have lost money on that long side trade if you had gotten in here. You know, you got this chop around in here. You probably end up getting chopped out, and you're starting to get in towards the lunch. So, not much going on in there. So that's the sniper trade of the day. Let me know in chat if you found that helpful. All right, here's George on. Let's see what he's got going on here. This is Alcoa on 30-minute charts. So the reason I've zoomed in on this one is that sometimes the detail is lost when you're looking at these from a great distance. So I like that short in here. It rolls over. Now here's the maximum favorable excursion against his standard risk box. I think that what he's doing here is saying this is actually his risk box, or this is where he would execute at right here. He would only let this get that far and then he would pull the trigger and get out, I think. If that's the case, then our maximum favorable excursion was about 1.3. And here's where the R10 bottomed out. This or this or this would have been dragon skin exits, which would have improved, instead of getting out here, which is a 0.1, I think, we would have improved our capture by about that much by respecting the maximum favorable excursion. Maximum favorable excursion. You want to know not just how much you risk, but how much are you giving back? You know, this orange box represents how much you gave back, and the green box shows how much you kept. So when you start putting that on your charts, you'll end up treating open gains with a little more attention to detail. And you got to decide, and you have to know what your average win is. If your average win was 0.7, and yet you had a maximum favorable excursion of 1.3, what you got was a double good above average win, and we let a double good above average win come all the way back to about what is that, like a 0.2 or 0.3? Yeah, 0.1. So there's some spillage in there that we want to be concerned about, okay? Nice trade. I'm not persuaded that your rule set is clear and consistent and triggers reliable action, because this looks like the same trade conceptually, and this one you actually let that get through the PSAR and actually go negative for a moment, and then it rolled over and came back to here, and then we exited here, and only because it's near the end of the day, and so you're able to capture that much. So I'd be surprised if your rule set allowed you to have those two trades following your written rules for exiting and money management. I don't think that that's true. I think where you should have exited was here, because you have the R10 rollover, you had a maximum favorable excursion, you had a sharp move, you might have even gotten out here, and I think that's a better risk-adjusted exit, because this actually went negative, and you had no way of knowing that this was not going to come up and visit this. And you got lucky and it rolled that way. So don't confuse results with intentions. So take a look at your exit management rules. Reasonable exit, maybe one bar late. Like I think this is supposed to fail. It had a chance to fail. It didn't. It comes up and hits the PSAR. I think I want you to exit there instead of here. All right, here's Lou. All right, so we got the PSAR flip here. There's his collapsing dragon. We might have been able to get short somewhere in here, but still the collapsing dragon is pretty solid. And notice when that collapsing dragon collapses, how fast that fails. And then continues to fail. At this point, I might have considered the 2R battle drill for a second entry short, because you're below the 2R. That's where you exited. And that's 2.5R in hand. Ain't nothing wrong with that. This could have been a second entry or a re-entry with an exit here, an SSC there with an exit here, a COTA 2 continuation to the downside here with an exit here, an SSC here with an exit here, and that's the last hour of the day, so we don't want to trade that. And we'll take 2.5R any day of the week. R10 rolls over. PSAR flips right there. There's a PSAR flip box. That's a short. That's a COTA 2 short. This is a collapsing dragon short. Oh joy, rapture. There is a dragon exit right there. Here is a SSC entry right here with a risk box right here. That's a COTA 2 second entry or a re-entry. Like if this had gotten you out, that should get you in. You beat yourself up about exiting here. I don't mind that, as long as you take that one and then you play that exit perfectly in here. That's about as good as you're going to get. Now, this is a great big COTA 2 in the long run. PSAR flip. Dragon exit. That is a Z3 pinch breakout. There's your pinch. He buys this, it rolls over, he cuts it quick. There's your piece. That's a fake 1, go 3. So I think we should be short right here or right here. That's still pretty good. I don't mind that exit if it was a bar early, but then I want you re-entering here because you are below all the resistance. So it's in free fall. and you don't lose money on that kata too. You make money on that kata too. I know this is your window to time, or your time for trade, but I just want to point that out. So we're still looking good. 0.37 expectancy. Weekend reports. Bullish volatile. Gave back some the last couple days. Volatility is still jumpy and problematic. ETF2 is at 0%, so it is not favoring the swing trades. So that explains why I'm cashing most of those instead of holding them overnight. We've had a couple legs down. We're on the wrong side of the boundary. That nice thick fence. The RL 270 is starting to roll over. The 90 is falling. The 10 started to roll over. The RL 30 has rolled up. I actually take that as an optimistic sign, and the fact that the RL 270 is still up here, that's the optimistic case based on powerful previous move. But the two intermediate ones are showing some weakness, or the 90 and the 10 are showing some weakness. The 90 is weak, but the 30 is tentative, at a tentative turning point. So the 270 is strong up. The 90 is weak down. The 30 is like in the spring and tentatively up, potential turning point. And the 10 is pausing and just started to roll over. So that's a mixed bag. The longer term ones actually show some favorability there. Trader's Delight. The 3-day. So now we're looking at the 3-9 sniper. Come on, dummy. The 3-day, 9-day. So the 3-day bars are fast. This thing has had one leg down, two legs down, started to roll up, but now it closed weakly. That's a problem. This is showing weakness. It's a compound critical state, though. There's a nice move back to the top, but if this collapses below here, and the gateway is right there, it gets down to this channel, anywhere in here. So that's a warning sign. This gave us one warning when the PSAR flipped and the dragon rolled over and the RL10 rolled over and crossed the 30. So this is showing careful, pause. We've had a nice run up here. Caution, and respect the fact that the volatility is showing caution as well. This is trading territory. We're hunting wabbits, and tigers are hunting us. Normal stuff. Cash everywhere except for the energy and the BMR portfolios. Remember, energy is a shorter term swing opportunity. Amgen and United Health are the only things showing any kind of strength. This little piece right here, JP Morgan and Walmart, old reliables making the turn. This is really one good week in an otherwise dismal year. So that's that's a lure. And Walgreens is a trade, but it's psychotic. Traders market, no clear emerging leaders. Energy is dominating in ETF Max. In the world market model, going into the weekend, in the US, only large cap tech, that's the Qs, and XLK are doing well. The other large caps are above average, that's DIA and SPY, but the mid caps and the smalls are both below average. India, great. Taiwan, pretty good with Malaysia, but Hong Kong, South Korea getting smoked. Mexico, bad. Brazil, good. Oil and commodities, real things, doing well. Commodities and oil showing strength. The equities in the form of the S&P are above average. Treasuries and real estate getting slaughtered. All the usual suspects. Daily report, you've seen these already. Let's go to tactical. Now, still plenty of auto framers to choose from. Breakdown in IBM. Big breakdown in Texas Instruments. Big ups in United Health. I've just missed that trade altogether. There's a 5DD in Pfizer. In ETF 30s, breakout and gold to the upside. Otherwise, no patterns and just a handful. This is a market that is in mind split. It's psychotic and schizophrenic. No clear emerging trends. Gee, it's almost as if the world was at war. Keep your powder dry. I think long term, if you're a value player and you're a fund manager, how do you not see McDonald's and Coke and Home Depot as great assets on sale? I think that has to be the case. No pinches for real. Standard tactics. So today was a tale of two different markets, really. You have a handful of things that are doing pretty well, defensive plays and energy, and then a bunch of things that just nobody wanted to hold them over a long weekend. And the same thing. Devon Energy and JP Morgan. JP Morgan, maybe there's probably something there as the last bank that'll fail. That's how I read that. Flight to quality. Standard trading value list for intraday trading. You know, we're like in those top 10 by default, top 5 for sure. Marijuana, Tesla, clean energy, Nvidia. Those are all in my 30-minute swing portfolio. Why? Because they're up here. The top 5 from that report. All right, that's everything we got for today. We'll get this published and posted. Storytelling Circle in the morning. Sunday morning, Foundations check-in at 9 Central. Creativity 202 at 10 Central. If you're a student in that course, send me your questions. I'll be ready to debrief, and we'll see you then. Take good care, guys.